welcome. You're watching NewsX and I'm Megha Sharma. The RBI Monetary Policy Committee has now slashed the repo rate for the first time in 5 years. The newly appointed RBI Governor Sanjay Malhotra has announced the repo rate revision from 6.5% to 6.25%. The decision was unanimously adopted by the committee and paves way for further possible rate cuts. This is a significant relief for India's middle class and home loan buyers who will benefit from lower EMIs. RBI's decision comes days after the Finance Minister Nirmala Sitharaman announced zero income tax for salaries up to 12 lakh rupees. The repo rate cut is also expected to boost demand for home loans, hence giving opportunity for the real estate market to grow, making housing affordable and allowing overall sector growth in the country. Let's start our conversation. Dr. Ajay Dua, who's the former Commerce Secretary, on the telecast with me. Dr. Dua, thank you for joining us. And of course, do you think this big bonanza continues from the Government of India first, the Finance Ministry announcing that there is going to be revised tax slabs, a massive relief for the middle class, and now the RBI comes up with another drop in the repo rate, 0.25%, immediately going to be affected and impacting the middle class, impacting the loans that they will have to take, impacting their EMIs, which are now going to reduce.
Megha, thank you very much for having me in this discussion. I think the actions first in the budget aimed at boosting consumption by putting more money in the hands of the middle class, and now making also putting more liquidity into the market by lowering of the repo rate, which the Reserve Bank has done today, as you very rightly recalled, after a gap of 5 years, are all first recognizing that the economy is no longer proceeding at the pace at which it was expected to, or it had done so hitherto in the previous 3 years. So it was, both these actions were desirable, and let's hope that the transmission of this small reduction in the repo rate by 0.25% will be full, because transmission from the repo rate to the actual market rates of interest, it does take a while, and also it's not necessary that the entire reduction in the market would be to the extent of the rate lowered by the Reserve Bank of India. That's been the experience in the past in the Indian capital market. That's why I am referring to both these these conditionalities.
Okay, all right. Dr. Sharad Kohli, I'm going to come to you. Now, infusing more funds into the market for circulation, how does this potentially impact the economy? Keeping in mind, let's be clear that our growth rate is the fastest in any major economy of the world, but it continues to be a moderate 6.3%.
Good evening, Megha. Good evening to my fellow panelists and NewsX viewers. You see, whenever an RBI monetary policy comes, the commentary therein is more important than the MPC decisions. Of course, MPC decision is welcome. 25 basis points cut is very welcome. It's coming after a long gap of 5 years. So definitely the EMIs are going to get bit cheaper. It will probably boost the demand for real estate. It will boost the demand for consumer goods. It will boost the demand for basically making the money cheaper in the market, good for business as well. But we need to keep in mind that when Mr. Sanjay Malhotra, the RBI governor, was speaking in the announcements, I was very closely glued to the whole speech. He did mention about the global headwinds and global policy uncertainty. So I think we need to make sure that this rate cut, typically there should be 2 to 3 more rate cuts. I am expecting another 50 to 75 basis points going forward. Now the condition there is that things should remain constant, because the way President Trump has been making announcements every morning and evening, not even on a day-on-day basis, we wait every morning and evening, something coming out of his box, in terms of whether it is trade war, whether it is other policies, economic policies relating to expansion of America's reign, declaring Middle East Riviera in Gaza and so on. So I think these announcements are causing a bit of a flutter in the global economic scenario. So the geo-economic situation has become very volatile. So which RBI governor in his announcement accepted. Obviously, he didn't refer directly to President Trump's announcement, but he did indirectly talk about this. So I think we have to assume some kind of consistency in the rate cut in the next 2 or 3 MPC meetings, which happen after every 2 months. Inflation, a big concern. So I think a balance between inflation and growth has to be maintained. Well, the RBI governor and the government has now realized that yes, economy is sluggish. We need to now moderate our stance from being hawkish to being accommodatory. So I think that stance seems to be coming now with 25 basis point. But inflation as a problem has to be recognized and continued to be monitored from here. Even though a stance has been shifting of gears has happened from growth or from inflation to growth now, but things can change overnight the way global scenario is looking like. Well,
Right.
there's no doubt that India is the
Yes, because it's in direct contrast. We have not been dropping our repo rate for the last 5 years. Yogendra Kapoor, when we're in direct contrast, if we take a look at the US economy, the repo rates have been dropped every 6 months. What does that indicate?
That the major problem that our economy had been facing was the sluggishness in the consumption levels. Since the consumption levels were falling, I think the government and RBI had to be sensitive, and I think they're doing their respective parts. If we look at the positive side, I think there are 3 elements which I foresee are going to be immediately impacted because of this. One is obviously the saving potential in the hands of individuals, which is by way of lowering of the EMI, whether it is housing, vehicle, personal loans. It will reduce the cost of borrowing for the businesses, and it will have an effect of propelling the investment into the economy. The other aspect is that, when it comes to one of the major drivers again of your economy, which is your foreign exchange earnings.
Yeah.
So I feel your export itself will also become competitive when your the element of cost which gets reduces on account of the financial cost as such. So it will make our exports also more competitive and more prospering in the economy.
Okay. Yatendra Khemka, he's a CA and an economist also on the telecast with me. Mr. Khemka, an important milestone that India is very soon going to achieve, the $5 trillion economy and the 3rd largest economy in the world. The aim is to reach there by 2030. How fast should the GDP growth rate be for us to achieve that milestone and move ahead? And how does this repo rate reduction help in achieving that milestone?
Thank you, Megha. Thank you, everyone, and giving this opportunity. And good evening to each one of you. As you said, that 5 trillion economic target, when it will be achieved, my opinion is we have estimated that our GDP will be 356 lakh crore rupees by the next year, right? So it means around 4.5 trillion or 4 something trillion economy will be there. And my take is that it will be by 2027 or few months later, we will be able to achieve that target of 5 trillion economy as far as India is concerned.
Okay, there is an audio issue. We'll come back to you, sir. But Dr. Dua, again, I would like to understand from you the contrast between the US economy and the Indian economy right now. Obviously, US economy's growth rate is much slower than Indian economies, but there are other challenges that America has to face as an economy versus India. But what is the impact of Donald Trump administration on how Indian economy functions?
One, whether the protectionist measures accentuating of the protectionist measures by President Trump's administration is how it will affect the global trade. If they expect, we have already seen that the global trade has been coming down over the years, the pace of growth in the global trade, and that during the current year it was expected to be barely 3%. With now the tariffs, only reprieve given to Mexico, Canada, and with China, 10% is going to become effective later tonight. That if that happens, I do not think that it is a good sign for an economy like India, because the point which was earlier made, that our exports will become competitive, certainly, but if the overall size of the export market, trade itself comes down, then this 0.25% change in the rate of interest may not be adequate to keep the economy growing at the rate which we had envisaged. Envisaged for the year was over 7% in the beginning of the year, and now we are hovering around maximum about 6.2%. And going forward, the Reserve Bank Governor mentioned today that he hopes that while the geopolitical situation would not worsen and things would not worsen, that the rate of growth could go up to 6.7% next
Right.
year. So I'm keeping my fingers crossed. But if there is a direct levy of tariffs by Mr. Trump, we will see after Prime Minister Modi has met him next week what is the outcome. If there is a tariff war between India and the United States, then of course our rate of growth is going to be hit much more in that direct confrontation rather than the indirect one, which is in any case going to affect.
Okay. Coming back to Dr. Kohli again, you know, the double bonanza in this entire week, which was the budget, and now we talk about the repo rate cut. Do you feel the government of India right now is under some sort of pressure to perform?
No, it's not about the pressure. It's about the state of the economy, Megha. The state of the economy. I think the situation in the economy demands that. So it's not a question of pressure. I mean, there's no political pressure, but I think this is a growth-oriented government. It does want country to, catch up that pace, remain in that pace. We've had the reputation of being the fastest growing emerging economy, large economy in the world. Obviously, you don't want that reputation to sink away, and for the sake of countrymen also. Why just sake of reputation? I mean, if it is sabka saath, sabka vishwas, sabka, when you want the whole country to grow, obviously the GDP has to grow. People have to, 60% of our economy, Megha, is made up out of consumption. And if that consumption slows down, obviously, it is going to impact overall. The private investment gets affected, manufacturing gets impacted, export gets impacted. And a big problem, Megha, that we are facing right now is dollar versus rupee. Well, President Trump doesn't allow, he's not allowing people to come out with an alternate currency. Look at his reactions on BRICS currency. So if we continue to depend on dollar and the rupee continues to become weak, we should not forget 87% of our import of energy is from overseas, and the rupee comes under pressure. And a very important point from RBI Monetary Policy Committee today, which I read between the lines, was, Megha, that intervention of RBI in regulating the rupee has been lesser, which is why we crossed 87.5 now. Rupee is an all-time low, which is, I think, a big headache. Apart from benefiting the exporters, it doesn't help the economy overall. Our imports become expensive, currency becomes weaker. So I think there are multiple concerns there, and RBI I would say in synchronization with the government has to monitor and set the position right. We should not lose the pace at any cost. So it's not about the pressure, it's about the monitoring of the economy, which any government in this position would have taken. And I'm glad that there is a double-edged approach to that, whereas fiscal approach in terms of government by reducing the income tax and so, and a monetary approach by RBI. I think in combination, both should work together to arrest this sluggishness and make sure that the economy continues to grow, Megha.
Okay. Yogendra Kapoor, again, I do want to understand, out of curiosity, what led to the growth rate touching at about 8% and then rapidly moving to 6.3%? Was it just, readjustment of and bringing an equilibrium from the COVID hit that the economies of the world felt, and India was no exception to it? And now that equilibrium has been established, we are back to, a sluggishness, as Dr. Sharad Kohli was saying, that is now being witnessed, experienced in the market.
See, Megha, what I feel is that, if we look at the various components of our GDP, I think the major factors, one is consumption, of course, which we have already discussed. The other aspect which I feel our country is been consistently lagging behind is the amount of private investment that should be basically coming into the economy. You see, here we have a situation that our top and big corporates, they are sitting on huge cash reserves, which is not getting reinvested into the economy. And I think for a growing economy like India, it is very important that all your engines need to fire in the right direction. And once we see that there is an element of more of investment into the economy, it tends to make basically the cost of your products and services cheaper. So, and henceforth, it also helps you in your competitiveness when you are when you see that your imports are increasing and your exports are reducing on a regular basis. So, I think what is very important for the government to focus here upon is that if they want India to remain as one of the top engines of world growth, because if you see our contribution towards the GDP of the world is just 3.5, I think, if I am not mistaken, to be absolute. So I think there is a huge potential going forward, and for that it is very important that we need to be working as a cohesive force in all respects.
Okay. Yatendra Khemka, what does the future hold? What does India need at this time to have a double-digit growth? How can we build our infrastructure and investment ecosystem which can be drawn parallels to China, because China had this 20-year growth rate which was in double digits for it to be able to become a superpower of the world?
Meghna, what I think that we should focus on agriculture and manufacturing both, and what RBI Governor and Economic Survey as well as in budget, FM has said that we will try to achieve the agriculture growth by 5%. But my suggestion to the government is that we should work how the rural economy is going to grow at least by 15% for next 10 years to be a developed nation and to have the inclusive growth, because 50% we are unable, and investment in agriculture is very, very crucial, and because the land size and marginal farmers, and there are so many issues we should keep in mind and focus how those can be technically viable, and how we can reduce the dependence on major part of the population on agriculture and make it more profitable and support them. Unless and until we don't do that, I don't think that our nation will grow rapidly, which other economists are focusing more on manufacturing and other part. But definitely we should reduce the dependence of the population on agriculture, but and take the agriculture growth rate in to the around 15% at least for 15 years.
Okay. Okay, thank you, Mr. Khemka. I'm going to come back to you, Dr. Dua. Dr. Dua here. Now, how do you project India is going to become a major manufacturing hub? Is it going to be enough if we are just solely reliant on the MSMEs and small industries and startups and the unicorns and the tertiary sector, the IT sector, that obviously is something that India boasts of all across the globe, but is that enough?
Megha, that's a $1 million question which you raised, because our share of manufacturing in the GDP has been hovering between 13 to 18% in the last 15 years. I find that it is a required task, but at the same time continues to remain challenging for a variety of reasons. Certainly, small scale industry, small and medium enterprises, which form the backbone of any industrial economy, must grow in India. There can be no two ways about it, but we have the additional challenge that while we want to grow manufacturing like other countries, we have to ensure that manufacturing opens up jobs for our huge population. So that becomes a second constraint. Otherwise, by putting more capital, bringing more technology, and irrespective of its employment aspect, many countries have grown their manufacturing, but for us, we have a twin goal that increase manufacturing but also create more jobs. Now, more jobs probably going forward are looking very difficult in most sectors of the economy, particularly the new technology ones, which are going to be driving the economy of the future. So that is where the relationship between manufacturing growth and the services sector, which today is already the predominant sector,
Yeah.
55 to 60% of the GDP comes from the services, that the multiplier effect of manufacturing onto services, that has to be that can be further increased, and for that I would think two things are only necessary. One, make your people more employable, increase their skills, and that would help in increasing their productivity. That while they remain in the services sector, but they are coming up with greater output, greater productivity, and are able to contribute to their own welfare and thereby to the societies.
Sharat Kohli, Ben, where is the potential for growth in our country now? Is it going to be the new arenas of semiconductors and artificial intelligence and quantum computing? Are we looking at Make in India initiative in defense, which can be a strong revenue driver? Is it then going to be the maritime infrastructure that at this point of time has not been fully fulfilled, fully monetized by the country, by the economy? Where are these potentials lying?
Well, that's a $1 billion question. I'm sorry, I'm amending Mr. Dua's statement from $1 million to $1 billion because of inflation for a moment. I think there is a saying in Hindi, Megha, कि जहाँ हाथ डालो वहीं potential है. As far as India is concerned, whether it is agriculture, whether it is manufacturing, whether it is technology for all the sectors you mentioned, Internet of Things, artificial intelligence, blockchain technology, digital infrastructure, manufacturing, I think our country has the one word which runs common to all sectors is potential. There is potential everywhere, which is why, every time Prime Minister Modi travels, you must have noticed one thing when he interacts with the diaspora over there and with the local in the country, respective country, wherever he goes, there's one thing he mentions. You will not get a bigger market than India, a size of middle class, which is almost now twice the population of America. So I think the potential here is tremendous. Take, for example, agriculture. If today the startups, if you ask me to speak, I can burn away the rest of the time of your show. The startups in agriculture, if they start getting affiliated to agriculture, there's tremendous potential there. Technology, absolutely unmatched potential there. Manufacturing, as Mr. Dua said, our contribution is about 16-17%. This can easily move up to 50%, and that is what Make in India is all about. So potential, Megha, is tremendous. But the only thing is, the government can only do as much that it is doing. It is for the population also to reciprocate it in a way. We can improve on education, we can improve on skill development. So I think all that will, as they say, Rome wasn't built in a day. It's going to take some time for us to reach the maximum potential. And that is why 2047 has been set as the date when we should target being a developed economy. I think this time span has been calculated in a manner that it should allow us time to exploit the potential of all the sectors, Megha, is what I have to say.
Okay, all right. On that note, I'm out of time. I thank all of you for joining me on the telecast and sharing your views on this very important development that has taken place.
For more such videos, subscribe to the NewsX YouTube channel, hit the bell icon.